Hi, welcome to the Market Alert for Wednesday, the 23rd of February 2022. So preamble to World War III sends stocks higher, bonds lower, and gold and crude higher. So yesterday it was all about sanctions, imposing sanctions on Russia, and this brought a bit of stability to the market. And we'll talk about that more when we look at the stocks. In the economic news today, just a couple. We've got monetary policy report hearings, and we've got an MPC member from the UK as well out at 5. No US news today. And that's about it on the news front. So let's move over to the Dow. And I just want to talk about yesterday's move to the upside. Not so much in the Dow. It attempted to do so in the futures market until the cash market opened. Then it was hit to the downside. But a question I was asked about war and the effect on the markets. Well, all I can tell you is going back to 2003 when the West invaded Iraq, which was here, and you can see the result there with the market moving to the upside. But in all of the months, this is a monthly chart, all of the months before this, the market was marked down because it brings uncertainty. If you go to war, there is a certainty then, in particular with the West, that they're going to win anyway, so that brings stability back to the market. However, in this situation, this is slightly different because, let's face it, nobody really knows what Russia is going to do, what military arms that they have, and also how much in bed they are with the Chinese. So this is what would be the case normally. You can go back and look at all of the others as well, right back to 1991, same thing. But the problem is, like I say, there are unknown variables with this one, and whether it actually happens at all, to be honest with you, because Biden and Johnson keep talking about it's already started, but there doesn't seem to be any proof of that. So at the moment, it's bringing a bit of, well, yesterday it brought stability to the market. Whether it holds today is another thing. Too many variables with this one. It's not the same as invading the Middle East at all. With the West, this is where we're not participating at the moment, apart from sanctions. So it's an unknown. We'll just have to take each day as it comes. But if there are days where there is an element of certainty, you'll get an update. It's as simple as that. Okay, so yesterday in the Dow, the market, as I just said, it was moving higher. If you look at the 30-minute chart, it moved higher. To begin with, it was all holding well. Sorry, this is where we need to look at here. The market was holding well. Then the Dow opened, and then the selling hit, and then it just plunged throughout to the late afternoon and early evening. They managed to get the plunge protection team in to bring the market back, and it's been sitting at the pivot point there, the DP, and the close, but it's got resistance at the 50 bar EMA, and we're overbought at the moment, so it's looking a bit on the weakish side for the Dow. Like I say, in the daily, there's the net result of the 30-minute, and if we go from this low up to this high, you will see the market stopping at 89 for yesterday. It's a case of will it hold? If it doesn't, then we'll have to move up to the weekly chart to see where we go next, because we're through all of the other targets that we've had. We've got this one here, which is 33,026. So make it 32,000. Sorry, 33,000, because that will take you back to a good area of support there. That's going to be crucial, and that will just take out the low of the bar that was put in 4 weeks ago. But we're certainly making our way back. I'm just going to remove this, and if I draw in the fibs from here to here, we end up exactly the same as the daily chart as well, so you can see that. It's first time in a while that I've actually used the weekly chart for targets to the downside, that's for sure. It looks like we're going to be using these quite a bit at the moment if the market doesn't hold at these levels. So that's the Dow. Let's move on to the DAX. Have a look, see what's going on in there. I'll find it in a minute. There we go. So yesterday the DAX putting in a solid performance to the upside, retracement. Just draw in some fibs on this one just in case the up move continues during today. That's where we are. We've got resistance at 38%. and the 5-bar moving average there as well, which needs to be taken out if there's going to be any sign of movement to the upside. But again, the weekly chart is where we need to look. We're already broken this level here, the 14,812. And let me just compress the chart so we can see. So from this is the next major low down to here, brings you to 62%. That's going to be the key area if prices move lower instead of finding support. So that's 62%, 14,418. If you think 14,400 again, because this is a weekly chart, 18 points is neither here nor there. You need to watch this level, because it's the golden ratio, very important level. So make a note of that one. We're already heading to oversold as well. In the 30-minute yesterday, as I say, we came off the low. The low is very important, as we know. You can see all of the activity there. Prices then moving to the upside, then floating down with the Dow to the close after becoming overbought. You can see that. And then overnight, prices have been brought back, certainly a lot stronger than the Dow at the moment. Trading to, as you'll see there, yesterday's high as well. This needs to be taken out if prices to move to the upside, but currently in the 30-minute chart we are overbought, and we could see a bit of selling to the downside with this current situation here. And then in the 5-minute chart you will see yesterday's trades here as well. We started off with a sell in the pre-market session. We then became oversold. We've got the demand, we've got the divergence, we've got the crossover, we've got the retracement, and then the market moving to the upside. The two short trades that we had with these pullbacks, I've covered these in the live trading session part of the website. So just to show you this, they're in here if you want to have a look. More trades added for yesterday, showing how I traded these pullbacks, and then the market sideways. But certainly plenty of trades yesterday with the overbought and oversold conditions in the 5 minutes. There was no end of good trading opportunities yesterday. You can see them for yourself where the market reversed, overbought, divergence, pull back, oversold, pull back, double top, overbought, pull back, oversold, small move to the upside, and that's all the way up through to lunchtime. Again, oversold, overbought, oversold, pull back, and then retracement, and then down again, overbought. Lovely trading yesterday in the 5-minute chart, conforming beautifully to all of the 5 steps. Quick look at the currencies, and we'll start off with what we got here. We'll go with the JPY daily. Yesterday the market moving down to the fibs that we drew in. Still in a bit of a sideways range for this market. So let's just draw in some upside fibs as well. It depends on how much stronger the dollar's going to get with this war in the background. But there's the upside targets for the yen. Downside targets will remain at the moment. Let's have a look at the 30-minute of this. So you can see yesterday where the market pulled back and then moved to the upside to the 200 MA. See how this became a resistance area. Overnight the market's traded to yesterday's high, a bit like the DAX, and currently sitting at the close and oversold, so looking still to try and move back through yesterday's high that we see in the daily chart there. In the pound, again also moving lower yesterday. Just go back to that, and trading down from this low to here to 62%, and you've got the 50-bar moving average as well, moving higher and attempting to try and get to the upside there. Just remove a few of these other fibs. So as the market's trying to move higher, watch out for the upside targets that we can see here. 62 is tying in with yesterday's high in the pound, so watch this level. 30-minute chart for the pound yesterday. Also, again, we were down, traded down to the S2, oversold, divergence, crossover, demand coming in, green, and then off we went to the upside. And then finally in the metals, an interesting picture developing here, because the 200 MA is stopping the silver market going through. It's not having it at any price at the moment. Huge volume yesterday as well, overbought. For me, I don't think it's going to do it. I think we're going to see prices moving back down and having a bit of a shakeout again. If the invasion of Ukraine officially happens, then that certainty brings in a certainty, and it'll allow them to shake out the markets, despite the fact that this should be hundreds of dollars higher, and it's not anyway. But you can see what they're doing. I mean, just look at it yesterday. It speaks volumes. And last time we got to the 200 MA as well, you can see the volume picking up there in those two bars as well. And we've got a third one across here, haven't we, where the market struggled with the 200 MA. We only got a bit of selling there, though. They didn't need to do a lot in this one. There is a bit of a spike there, but again, nothing like we've got here. So you can see they're desperate to not let this market get above that 200 MA at the moment. And yesterday in silver shows this as well. That's where it happened. Again, you can see a lot of selling there. And gold also struggling at the moment. A lot of selling in there yesterday as well. So again, they've got to get rid of the selling in order to move higher. The dollar was high yesterday, but there's also a lot of supply in this as well. So we need this to move lower to stand any chance of moving higher through the 200 MA in the silver market. Crude oil up again yesterday, putting in another new high. Let me just grab this. And we've got 99.41, so that $100 per barrel level is on the cards for the April contract there. Okay, that's it for this one. I covered a lot and a lot happening, so again, just keep an eye on the news, because it's a bit of a tough one. It can soon switch directions as the events in Russia and Ukraine unfold on a minute by minute basis. Okay, that's it. As ever, thanks for watching. See you in the next one.